Hello everyone, welcome to Finance with Justus. I'm Justus. With a crash in European real estate recently, one of the companies which came under pressure is Vonovia. Vonovia is the biggest residential real estate company in Germany. They also have some residential units in Austria and Sweden, but their core business is in Germany. They only have apartments which are mostly in big growing cities. They have other services that service those buildings. Stuff like garden services, repairs, etc. So they have the residential, and also the services that service these apartments. They also do some construction, but they recently stopped that. Of course, real estate prices have gone down. They lowered their portfolio value by around 13.6% per share, but I would never really pay too much attention to those net asset values. They can be heavily skewed at over time. What you should look at is the rent. So let's see how the business segments are developing. 2.3% increase. They have sold off some apartments, not by a lot. They sold around 0.3% of their housing portfolio. They had around 3% in organic rent increase. So their rental income is doing fine. What is special about Vonovia is all their apartments are usually at lower price levels. The rents are very secure because a lot of those rents are actually paid by the state. A lot of Vonovia apartments are rented by very low income people, so they qualify for housing assistance. And one of the most reliable payers is the state. Their vacancy rate overall is very low. In total, they only have 2.2% vacancy rate, so they're doing very well there. All of their apartments are basically occupied. But of course, some segments like income from disposal of properties, they sold less properties, and also disposal reoccurring sales, which is them building houses to either rent on their own or sell. That basically stopped. They said they will stop all new construction, only the construction that is already going on. They just said they just cannot make it profitable. You cannot build profitably in Germany very big right now because of overregulation. And while that sounds bad, which it is for the economy itself, for Vonovia it's great because they're the biggest landlord. That is why their rental business is still strong. Especially in the cities where Vonovia is where the real estate is very sparse. Housing construction is at lows in Germany. So this rental income will stay stable for some time. You can expect around 3 to 4% rent increase. Also with them servicing the apartments, this is where they have higher margins than other residential REITs. Technically, Vonovia is not a REIT because legally in Germany, you cannot have a REIT who holds residential real estate. If you see that revenue shrank overall, that is just because they're not selling as much buildings anymore, but their rental core business is very strong still. Germany's population will keep going up. The old people who are going into retirement, they won't die for a long time. While they're not productive, they still need some place to live. Migration will also raise housing prices just because there are more people and no new housing is being built. Now let's look at the debt situation of Vonovia, because as we all know, debt is a big issue right now with real estate companies. They have around 42.5 billion euros in net debt. They reduced this by around 1.2 billion. I would say that will continue like that probably for the next few years, that they pay down around 1.2 billion per year. They pay around 600 million per year in interest expenses right now. That's a very low interest rate they have. In Europe, rates have been lower for long. Now they have around 2 billion euros per year in group FFO. Even if the interest expense would go times 3, they would still be able to pay. Now we gotta make sure though, when does the debt mature? If all the debt matures in years ahead, the interest rates right now, they do not matter to Vonovia. They will not be impacted by it, but if all the debt matures very, very soon, then the company's impacted. The debt matures pretty evenly, around 2 billion this year, 3 billion next year, and 4 to 5 billion on then on. Now they have 2 billion in FFO per year, minus the dividend, let's say conservatively around 1.3 billion per year to pay down debt after the dividend, which is what they paid down before. So I would say that is pretty reasonable. So they will not be able to pay down the debt each year. They have to refinance some. Unless they sell more buildings, which they said they won't do unless it's really necessary. What would they pay right now to refinance their debt? And would they be able to afford that? Here we are on their debt page. This is all of their big bonds. What are they paying right now in interest on the debt that is maturing soon? We can see some bonds which are maturing 2024. They pay around 1.6 right now on that. Some other ones, they basically pay less than 1%. But there are also some where they pay 5%. Now we gotta see how much will they rise probably. So let's take this bond which they issued last year at 2.3%. It will mature in 32. So let's see what it's trading at right now. It's trading around 80. So that would be around a 5% yearly return that the market wants from Vonovia bonds right now. So if Vonovia would to refinance its entire debt, they would probably pay around 5% right now, which we know 42 billion. 10% of that, 4 billion, 5% of that. That would basically leave them with very little FFO, around only 300 million in FFO. But we gotta know, they don't have to refinance everything immediately. So while it will be hard for the company, they will be able to refinance this. Now when it comes to valuing Vonovia, we need to be conservative. Let's say FFO per share halves to 1.2, and they're gonna grow by 6% for the next 5 years and 5% afterwards. That is because we're already starting at a very low rate. Rents are gonna rise by 3 to 4%, so 6 to 5% at these low rates are a very conservative estimate. At a discount ratio of 10% and a terminal multiple of 15, that would give us an intrinsic value of 18.58 euros. That is below the current value, so there would be downside in this scenario. But that would be the most conservative estimate. What I think is more realistic is this case, where we have a FFO per share of 1.5, so still very down, but not as much as before. A growth rate of 8%, 6% afterwards. In this case, it would say you would get an above 10% return. I own a position in Vonovia, but I'm not adding to it. I bought it at a way lower rate, so I would not personally buy Vonovia right now, but I would also not sell it right now. It is not too far away from the very low assumptions, so maybe it is a buy right now, but I just want to be absolutely certain. It is a stock with a lot of debt. Debt can go ugly very fast. What do you think about Vonovia? Do you think the stock is a buy? Write it down in the comments. Have a good day.